Welcome, everybody. This is Jeffry Dunyon here with the Moving Markets Podcast. Today is May the 7th, 2019. As I'm doing the podcast today, it is about almost 11:30 Mountain Time, so it's about 1:30 out on the East Coast. We are having, I think this is the worst day of the calendar year. I might be wrong on that. There might have been one of those crazy days back in January when there was a massive sell-off, only to reverse the next day. But as I start this presentation right now, the Dow Jones Industrial Average is down 520 points. NASDAQ is down 180, S&P down 56. Respectively, that's about 2% or close to 2% each on the Dow and the S&P. It's about 2.25% on the NASDAQ. The backdrop of all of this is a continuation of what started yesterday. Although yesterday was weird. In this, when we did this presentation yesterday, the Dow had been down 471 points in the early minutes of trading. It had come back and was only down maybe 250 points or so. And then it just continued to gradually eke its way back up throughout the day. At one point in time, I saw that the Dow was only down 29 points. That's a blip on the radar. 29-point move on the Dow for one day is virtually nothing. So it was down, 29 points, and then it finished in the last, 5-10 minutes of the market. It sold off just a little bit more, but it only finished down 66 points. And think about that. That's a 405-point recovery from where its lowest point of the day was. That's a big turnaround. That's a big intraday swing. I can't even imagine what things would have been like had it actually gone into positive territory. Yesterday, what happened is you had the breaking news over the weekend about China kind of reneging on what it's been saying it's going to do. Trade talks deteriorating, Trump threatening that on Friday, tariffs are going from 10% to 20% or 25% on over $200 billion worth of products that we sell to China or that they import into here. I don't remember which way it is. But as the day went on, there was more and more talk about how what Trump was doing was going to get China to the table. It was going to get them to come around. It was going to kind of, the pervasive attitude was not that big a deal. This is going to be something we can survive. This is going to be not that big a deal. And then, this morning, the Dow started down not nearly as far, started down a couple hundred points. I think 240, 245 in the early trading, and then it kind of started to come back, was down only 210, and then it was down only 200, and it was down only 195, and then 185. And then at about the same time it began coming back yesterday, it began to slide today, and it has been a very steady slide. Very steady slide. It is at the session lows right now, down 531, 535. And there's, there's what, 2.5 hours left of trading today. I have a hard time believing in 2.5 hours it's going to come back. Now most of you are listening, it's down 240 points or 540 points now. Most of you that listen to this, you listen to it later in the day. And so, by the time you're hearing this, the markets will have closed most likely. You'll know where things finished and where things settled for the day. It's the tensions between the U.S. and China continue to escalate. And as a result of that, you've just got this scenario where everyone's being proven wrong who said that no deal with China was already baked into the market. Now, when we were off the air for a little while, the market was doing great. Things were coming up. We were in the midst or towards the top end of that phenomenal rebound that we had from fourth quarter of last year. And it was, everything was good. Life was good. We were at the early part of earnings season. Earnings reports were coming in from corporate America. They were better than expected across the board. In some cases, revenues were down a little bit, but everything else was, profit, earnings, everything was good, even though revenues were down, and it was beating analysts' expectations consistently. So, you had that going on. And at that time, a handful of people started making the comment that, if we don't get a deal with China, that may not be the end of the world. That may not be the biggest deal. The market kind of has it baked in already that we can survive even if they can't. The thought process was kind of this. If we don't get a deal with China, if we continue to increase tariffs, or if we keep tariffs in place, it hurts the Chinese a lot more than it hurts us. Now, that's based primarily on the number of goods that they produce that are sold in the U.S. versus the number of goods that are produced in the U.S. and sold to China. There's an imbalance there without even getting into the percentages and the numbers of trade imbalance. We talked a little bit about that yesterday, so I'm not going to go into it again today. Listen to yesterday's episode if you want a little explanation of that. But without even talking about the trade imbalance, there is and will be an imbalance of how much we sell to them versus what they sell to us. And the idea is that they're going to be hurt a lot more by tariffs than we're going to be hurt. I don't know. That's outside of my wheelhouse. I don't know what numbers are used to come to that. I don't know what the math is that suggests that would be the case. Enough people, and this is people who don't bring politics into the mix at all. Enough people who, whether they like the administration, they like what they're doing from an economic standpoint, or whether they don't, there are enough people on either side that concur that it's a worse deal for China. Well, in one of their most recent economic reports, there looked like some stabilization in China's economy. China has been reporting numbers that show that their economy is slowing down, not necessarily going into recession, not necessarily going backwards, but that their rate of growth is slowing considerably. That causes a worldwide growth because they're such a huge part of the world economy. That prompted fears of the slowdown in the U.S. growth. I mean, this is part of what went into the big sell-off that we had starting in October of last year, when there was slowdown in global growth, combined with everyone believing the Fed was going to continue to raise interest rates aggressively. That made for a bad combination. That was I think the Fed's comments were the primary catalyst event, but the slowing global economy was the tinder that lit up when the match was thrown in. The match was the comments made by the Fed. Well, now you've got kind of a reverse situation that's also causing problems for the market. What you've got is signs that our economy is doing fantastic. Our economy is soaring. You can't. I don't care where your politics are. I don't care if you don't want to give the Trump administration credit. There were people on the news yesterday. One of the big stories going on throughout the day was that over the weekend, several of the Democrat candidates for their party's nomination to run for president were giving Obama credit for this economy right now. It's like, look, I don't even care if you fit into the category where you are so blinded by politics that you insist that Obama is the reason why we have a good economy right now. Okay, that's just being ignorant to the facts. But if you can at least admit that we have a booming economy right now, no matter what side you're on politically, if you try to deny that we have a strong economy, you're simply not looking at facts. Set all of your biases aside. Set all of your politics aside. Look at the simple facts. We've got the lowest unemployment numbers in my lifetime. And these are real unemployment numbers. These aren't unemployment numbers with an unbelievably low labor participation. When you've got a low percentage unemployment, but your labor participation is at 3 or 4 decade lows, that's really misleading the public. That's misleading people in terms of what the real unemployment is like. When you've got the kind of low unemployment numbers that we have right now, and you have labor participation that has rebounded tremendously from where it was 4 years ago, 5 years ago, you combine that with the number of jobs that have been added over the last few months. You add to that the GDP numbers that came in well above expectations. I mean, we were told. I've mentioned this before. I'm going to say it again. We were told very specifically by Barack Obama and numerous people in his administration that we should not ever expect more than 2% growth in GDP. That was the new norm. And it had to be for them because they had to paint a narrative where that was an acceptable rate of growth. That should have never been an acceptable, good rate of growth. It's better than the alternative. It's better than recession. I'm not saying that 2% growth is a bad thing. I would jokingly say to my friends and family, what is 2% better than? Better than 1%, right? But let's not, we had to be programmed by liberals and by the press to try and come to this belief that 2% was the new normal and we should be happy about 2%. Well, the current administration has blown those numbers out of the water. They're coming in with GDP numbers better than expected. It is largely due to the tax cuts. Anyone who claims that the tax cuts have only benefited the rich, again, I don't care where your politics are, you're simply denying the facts. If it makes you feel better to admit the facts and give credit to the wrong person, go ahead and do that. I really don't care about that. But you can't deny the facts. And the facts are that the middle class and the lower class are getting the greatest benefit right now from increasing wages. That never happened in the previous administration. There was never a time in the previous administration where wages were going up and pay was going up. And that is happening now on top of all this other good news. So suddenly this narrative, this story that we had back in October of last year, that our growth was slowing down to the point where, combined with possible rate increases from the Fed, made for this horrible situation in the fourth quarter of last year, the worst December ever in the history of the U.S. stock markets. All of that has changed course now. Some numbers that came out of China recently suggested that their slowdown might not be as bad, or that they're back into a more aggressive growth mode. Our numbers certainly show that we're not subject, or we're not the victims of the global slowdown, that the United States economy is growing. We are the envy of every other country in the world when it comes to our economy. You can't, again, if it makes you feel better, give credit to someone who doesn't deserve credit, but don't deny the facts that we are the envy of every country in the world right now in terms of our economy. Well, now you put all that together and say, okay, if a China deal doesn't get done now, that's a really, really bad thing. And we may not be able to hurt the Chinese economy the way we thought we could hurt the Chinese economy with these increased tariffs. It may not have as big an impact on them as what was previously thought or previously stated. And therefore, the prospect of no deal becomes a more urgent thing. It creates a more desperate situation. I think by the end of this week, I really do think by the end of this week that the dust is going to settle a little bit. I don't automatically believe that come Friday, President Trump is going to go back on raising tariffs. I think it will happen if the Chinese don't come out in a very public way. This has got to be done pretty public. It can't be done purely through back channels. Or if it is communicated through back channels, it's got to be the Chinese have to agree with whatever we say publicly. So let's say the Chinese delegation comes to the U.S. delegation and says, look, you're right. We were going to kind of renege on some of the stuff that we said we would do, the crackdown on intellectual property, the forced forfeiture of technology and data, the unfair practices with currency manipulation. It was what started all of this was that Trump got word over the weekend that the Chinese delegation was reneging on all of that stuff, or at least I heard maybe a further story that maybe they didn't say they were going to renege on all that stuff, but they started pushing back hard and fighting against any mechanism whereby we could prove that they were following through. I really want to make sure people understand. My family has a little bit of a connection to Chinese culture. All four of my kids speak fluent Chinese. Well, a couple of them are fluent. The other ones speak some Mandarin Chinese. We have hosted Chinese kids in our home before. Generally speaking, I think we have a love for the Chinese people and Chinese culture. I can say that with a lot of confidence. I'm not saying anything to bash the people in China and to bash the country of China as much as I am the government of China. And I don't mind speaking out strong against the government of China. They lie and they cheat, and everyone knows that they lie and they cheat. This is not something that should be a revelation. No one that is rational, no one that is truly objective, and no one that is not being intellectually honest. No one who is being honest will ever say to you that you're wrong if you tell them that China cheats and lies when it comes to how they do business with the rest of the world. It's like it's a known fact, and you just have to be willing to play along with it if you want to do business with China, if you want to do business in China. We haven't talked about it as much on this program as some other aspects of it, but currency manipulation is a big part of it. China has been chastised, which is meaningless, but by the World Trade Organization, they've been chastised. That's like the United Nations saying, we're sanctioning you, or not sanctioning, we're reprimanding you. Don't do that again. We don't like what you did, Israel. Don't do it again. We're formally writing down that we don't like what you did. Israel's shaking in their boots when the United Nations does crap like that. Well, same thing with China and the World Trade Organization. They're a member of the World Trade Organization. They continue to lie. They continue to cheat. They continue to break the laws and violate the rules of the World Trade Organization. And the World Trade Organization is an impotent, meaningless organization that can't do anything. They can put on a document, we are officially censuring the Chinese government for currency manipulation. And the people in the Chinese government are saying, wow, what a bunch of idiots. What a bunch of cowards and wusses. There's nothing they can do. Donald Trump is finally doing something. He's finally doing something that hurts them in their pocketbook, that has the ability to hurt their economy. And if they don't want to suffer economically from it, they're going to have to come around. I wish I could remember who it was so I could give credit to the right person. There's a regular guest on Fox Business News. I spend my morning for an hour to maybe an hour and a half before the U.S. markets open, going back and forth between Fox Business News and CNBC. Admittedly, Fox Business News is far more political. They cover business stuff, but they don't. They're pretty open about mixing their politics in with their commentary and what they're looking at with the market. CNBC, on the other hand, is incredibly political. They just act as though they're not. So they're political on the other side. They just pretend not to be. And they're maybe not quite as overtly political, but that's part of the BS. That's part of the disguise of it. But I'm going back and forth, and there's a guy he's an emeritus professor. I'm gonna try and make it a point next time he's on to remember his name so I can give him credit. He has not been an across the board, myopic supporter of everything Donald Trump has done. He supports the policies by and large, doesn't always support the way Donald Trump goes about doing things. But he said, and this was when the market futures were down like 180, 190 points, and no one had any idea that the Dow would sell off almost 600 points during the day. But he made the comment prior to the market opening. He said, good for Trump if he keeps up with these tariffs, and if it absolutely destroys and ruins the Chinese economy, that can only be a good thing, because the only way they'll ever build their economy back up is if they'll agree to do it by playing by the rules. If their economy completely collapsed, the only way for them to ever build it back up is going to be to abide by World Trade Organization rules, to play fairly with other countries, and think back. There's TV shows that are done about it. There's movies that are done about it. You may have had some personal experience with it. Think back to the bully in elementary school, and when someone finally stood up to that bully and knocked him on his butt and kicked the crap out of him and embarrassed and humiliated him, he didn't scare anyone else anymore. It wasn't just the person that stood up to him. It's everyone else that used to be fearful of him and avoid him or give in to whatever he asked. none of them were afraid of him anymore once they saw that he could be toppled. I got to tell you, even though politically and publicly they might be saying otherwise, there is not a free capitalist country in this world right now that is not hopeful that we will kick the crap out of the Chinese economically, that we will bring them to their knees, or at least bring them to a trade agreement that has the checks and balances, that gives us the ability to prove beyond doubt that they are conforming to what they say they're going to. The whole world that has free economies is cheering for us to be successful, because we're the kid that's going to finally stand up to the bully. We're the one that's willing to take on the bully. And if we can beat that bully, if we can knock that bully onto his butt, if we can kick the crap out of him and kick a little common sense into him and feed him a big giant piece of humble pie, then after that, no one's going to be afraid of the bully. And everyone that China does business with from that point forward is going to say, okay, we'll continue to buy your products, but this is what you're going to have to do. And you're going to have to abide by it. And China may have no choice but to say, okay, if we got. My big concern is this, and this is what I'll end with. And I don't want to paint a doom and gloom scenario. And I don't typically get into fear mongering type stuff. I hope it doesn't come across too much in that way. My concern is this. I think there are people in the Chinese government that would welcome a fight, that would welcome a physical confrontation. People who would say, okay, it's kind of like what the Japanese did in World War II. If you know your history of World War II and what led to the bombing of Pearl Harbor, the United States had a major, heavy oil embargo on Japan. And I'm not condoning what Japan did, but I'm acknowledging that Japan felt like they had been backed into a corner, and certain Japanese leaders believed that the only way out of that corner was to punch, and to punch really hard, and to try and hit us and cripple us. There wasn't much acknowledgement that the reason those oil sanctions were in place is because the Japanese army was committing some horrible atrocities on other islands that were close to Japan and in the mainland of China and in the Philippines. I mean, they were doing some pretty horrific stuff. And there's little acknowledgement from those leaders at that time that those sanctions that were being put on were probably very justified, but they felt incredibly backed into a corner. China has some pretty horrific human rights track record. China is one of the last communist countries, and you could make a case that there's some people there that are pretty oppressed by a communist regime, but they would be really slow if they would ever be willing to acknowledge that these tariffs and some of this stuff they've kind of brought on themselves. Instead, my fear is the possibility that they, at some point in time, feel backed into a corner. And I don't think China would launch the first salvo in an actual, confrontation, an actual war-like confrontation. I think what could happen is that China could give someplace like North Korea just that little tiny push that they're sort of egging for to do something really stupid to sort of bait us into a fight. And for the characteristics, for the things that I like about the current administration, about Donald Trump, as it relates to policy and as it relates to what he's doing for the economy, what he's doing to deregulate, what he's doing for tax cuts, I'm a big fan of all that stuff. I'm not convinced that he could not be provoked into an escalated confrontation of some sort. That's my fear with all this. Otherwise, I think the tariffs are the right thing to do. We'll see how it plays out. I genuinely hope that by the end of this week, the dust is settled. But I've seen things go from the time we started this presentation. We were a little over 500 points down on the Dow. I saw it go down as deep as 565 points down. We're back to only being down 514. And it's a crappy day in the market when you're saying only down 514 points. So I'm going to wrap up there. I hope everybody has a great day. Hopefully this market settles down a little bit and maybe even rebounds in the next couple of days. Any little good news coming out of China, it'll rebound very, very quickly. Thanks, everyone. Have a great day.